Well, what's the mood on the floor of the trade in Chicago? Let's find out as we check in with Wall Street Trading's Scott Gecas here. Scott, what's the mood right now that we've gotten a little bit of this trade behind us now and got to work through some of the early shock to the system?
Yeah, well, right now, everything is all headlines. You know, like I've been saying for the last probably 6 to 8 months, everything has been going through headline risk. You know, and that's the reason why some of these options have a lot of premium in them. So going into the weekend, we started seeing volatility come in a little bit. Obviously, that wasn't warranted for that big of a drop in volatility going into all of the crazy news between the bombings in Israel, between the stuff in North Korea, as well as Trump with the trade war talks. I mean, there's an abundance of news coming in this morning. You know, with the soybean market, you've seen pretty much a collapse and then a big, strong rally. Now we're starting to slowly drift back down a little bit lower. Corn pretty much held, not really too dramatic of a sell-off. You're going to wait and see where those numbers are going to come in later this afternoon after the market close, see if that's going to make any effect one way or the other. And with the wheat market in particular, that's the only market that had a little bit of a bullish catalyst, and that actually closed the gap from the big move down today. So we're going to see how these all play out towards the end of the day here.
Is there enough strength in this wheat market then, now that that gap is closed, to be able to maybe maintain steady in here, or do you have optimistic outlook for it?
Well, it's all going to come down to what the numbers are going to be in the report later today. If they get positive numbers, then I expect that trend to continue a little bit to the upside.
Okay, we'll be back in just a moment, and we'll continue our conversation with Scott Gecas, Wall Street Trading, right after this. On to the feeder cattle market now. We've got the August down 90 at 145.47 now. September feeder cattle down 65 at 146.50. The October feeders are down 30, and the November feeder cattle down 53 at 147.72. But those October and November contracts not too far apart, a little less than 30 cents apart. Then over in the hogs, it's all lock limit lower, except the May contract. Don't have as many trades on that May contract, but it's still down 230. So, Scott Gecas, if we continue to go into the end of the day like this, that means tomorrow we'll be working with expanded limits. There's still a lot of volatility in this hog complex.
Yeah, for sure. You know, everything is, you know, the trade war talk back and forth. You know, they opened up limit down. They didn't even have a chance to do anything. You know, the option skew has always been to the call side, you know, coming in a little bit right now. If you're looking at just the May contract, which is the only one that's open, you're seeing about a 20% or 20-cent skew to the put side rather to the call side. So that's kind of significant. That's a little bit important. We're going to see where everything is going to go into place. You know, the biggest thing is the tariffs, especially with the hog market. You know, China is going to become a active buyer regardless if the tariffs are there or not. It's just going to take a little bit of time for them to, you know, accumulate some buys. You know, but if the tariffs come off, you're going to see a very large export campaign from the U.S. to China. So we're going to see how that really plays out over the next few days. We expect some type of news, one way or the other, to come out within the next few days. Somebody's going to say something one way or the other.
Scott, earlier in the day, we were hearing from some officials inside the pork industry that says it could be anywhere from 150 to 200,000 head of hogs are affected by that African swine fever in China, and that's how many that they would be short. If that is the case, then when it comes to the market reacting like it did to this news, is that a big deal, or is China still going to have to come to the United States for its pork?
Well, they're definitely going to have to come regardless of the tariffs or not. So if you remember when all this African swine fever started to break, they said originally if it was affected 10%, only 10%, then it would be equivalent to all of the U.S. pork that was exported in 2018. So right now we're reaching numbers 30, 40. I mean, who knows? Because we can't really trust those actual numbers that are coming out until we get a definitive number. So right now, I mean, we're seeing expectations well above 50%. Rumors are in the 70s, but again, they're just rumors. But right now, we know that they're going to have to get U.S. pork, and it's just a matter of how long is it going to take them to do it.
All right. Still optimistic about what this market can do?
Yeah, for sure.
Okay. Scott, sure appreciate it. Scott Gecas, he is with Wall Street Trading there at the edge of the trading floor in Chicago.
He's got some optimism left in him.
Yes, he does.
All right. Thank you so much. Appreciate that, John.